How's it going, everybody? This is Beat the Bush. Today I'm going to talk about the 2018 tax reform. Now, a lot of things are going to change, but I really just want to concentrate on the topics that are most important, the things that will affect your tax bill the most. First of all, in order to understand all of this, you have to realize that there's a thing called taxable income versus your income. Now, when you mix a certain amount of money, you're able to do a certain thing called a standard deduction or itemized deduction, which means that you can lower your tax bill by sort of effectively lowering that amount of income. So let's say you make $50,000 a year and then there's a deduction of $10,000. So this means that $50,000 minus $10,000, you only need to pay taxes on that $40,000. Now, whatever that remains is your taxable income, and this taxable income gets applied to your tax bracket. So whatever gross amount you earn, you don't take that directly and apply the tax bracket. You have to remove the deductions, remove your itemized deductions if you're itemizing, and then what remains is what gets taxed. So what you want is to maximize your deduction, be it standard deduction or itemized deduction, whichever gets you more deductions, you'll pick that one. And of course, relating to the tax bracket, you want a lower tax bracket. Of course, you can't choose which tax bracket you're in, but whenever they go through the tax bills and stuff, you kind of want to root for the things that gives you the least tax. Now, I think the most important thing that will apply to most taxpayer in this reform is the $10,000 limit in state and property taxes combined. This is going to affect a lot of people because a $10,000 limit is a pretty low limit. If you bought a property for, let's say, $670,000, usually the property tax is about 1.5%. Right there already, it's $10,000. So you satisfy this limit already, and any kind of state taxes that you pay on your income taxes, that amount is no longer deductible. And this is a huge thing because let's say you pay $10,000 in state taxes. Well, all of a sudden, you cannot count that. You cannot deduct this anymore. Therefore, you have to pay taxes on it. Whatever income tax bracket you're in, let's say it's 25%, that means all of a sudden your tax bill is going to be up by $2,500. Now, this tax bill is probably really confusing to everybody because right when you look at it, you don't know if it's better or worse for you because on one hand, you go, oh yeah, there's a cap on property tax and state taxes at $10,000. So you go, oh yeah, that's really bad. And then you look at the tax bracket and all across the board, you see that mostly it gets lowered. Now let's take a look at the tax bracket real quick. On the x-axis, you'll see the taxable income over here. I marked it 2017 in red, and you can clearly see in the lower income of about $150,000 or less, the taxable rate is actually higher. So in 2018, it's a little bit lower. So you can go, well, the property tax and state taxes are capped at $10,000. However, your overall tax bracket, it's lower. So it sort of counteracts each other. So it's not very clear if it's generally better for everyone or not. But to me, if you're going to lose out on property tax deductions and state income tax deduction, this amounts to something really large, especially for people that are living on the coast where property prices are really high. And just for owning one single property, you're going to satisfy this limit already. So anything that's on top of that, any kind of income that you make, all that state tax is not going to be deductible anymore. Now, going back to my example, you have a $670,000 home, which is pretty modest over here in California or over in New York. If you have 1.5% property tax, which is, a shortcut that I use, then right there, it's $10,000 of property tax. And anything over this, for example, you make $50,000 a year, California state tax is about 7.25%. And therefore, the total state taxes that you're going to end up paying, it's about $3,600. So right there, $3,600 that you cannot write off. Another very important point is mortgage interest write-offs. Now, mortgage interest write-off is not part of this $10,000 cap. However, they cap the mortgage interest deduction from a loan maximum of $1 million to $750,000. So again, in California or New York, it's very likely that people will borrow that much money in order to buy a home. So if you bought a home anything more expensive than $750,000 and you have a loan balance of something greater than that, well, the interest on it, anything over that, you cannot write off anymore. So what soothes this a little bit is that they did lower the tax bracket a little bit. They also changed the standard deduction from before of about $6,500. Now, this is if you don't itemize your deduction. So $6,500 is what you would take if you go, okay, I don't have any property tax or whatever, or it's so low that you don't really care, then you would take the standard deduction, which means that whatever income you make, you subtract out the standard deductions, and then that is the amount that you need to pay taxes on, and then you apply the tax bracket. Now, with them increasing the standard deduction to $12,000, it just means that if you can somehow get all your deductions lower than this, now this is not always practical for everybody, but if you're able to, let's say you can get your deductions down to like about $8,000 or something, then that $4,000, then you would take that standard deduction. Then that means you can have that $4,000 that you would not otherwise have, and then you don't have to pay taxes on that, even though you don't have the deductions to take off of that if you itemized. Now, this means if your state tax, your property tax, and your mortgage interest, if you add all those up, including all those other miscellaneous deductions and stuff, if all those is less than $12,000, then you would win. Now, for state tax, how do you lower this? Well, you can actually quit your job and not work anymore and just basically not earn that much income. Therefore, you're not paying all that much state tax. Property tax, if you have property, it's likely very hard to just go, okay, I'm going to sell this place, I'm going to buy a different one with lower property tax. So most of the time, this property tax is sort of, hard to move around. So let's just call this pretty stable, and you're not going to, increase or decrease it. Then you have mortgage interest. If you're in the position to be able to pay off your mortgage interest and somehow get your itemized deductions to be lower than $12,000, then you would win. Mortgage interest, let's say you're in a position to be able to pay off your mortgage, and let's say it's thousands of dollars. If you suddenly pay off your mortgage, then maybe you're able to get your itemized deductions to, I don't know, $8,000 or so. Then you do not need to itemize anymore. Then you just go, okay, I'm going to take the standard deduction, $12,000 off of your income already. Otherwise, it would be $8,000. Then right there, you win. Now, before, there's a personal exemption of $4,150 for every single person. In the new tax bill, it goes to zero. So you don't get any of that. So all in all the people that bought a house at $670,000 or more are going to get screwed in this part where there's a $10,000 cap on the property taxes. One small and very important point to make is that a couple standard deduction is $24,000. However, when you look at the state taxes and the property tax cap, it's also going to be $10,000. Whereas if that couple is not married, they're filing individually, then each of them will get $10,000 limit. So thanks for watching. I know this is not a comprehensive review of the tax reform or anything. I just want to pick at the most important points just so that, you can think about it going forward into the next year. Don't forget to give me a like on this video, comment down below. Let me know if you're doing anything in order to minimize your tax burden for 2018. If you're interested in supporting my channel, check out my Audible link down in the video description below. And if you don't like this audiobook or this service, you can cancel it before the subscription expires, and you don't have to pay a thing, and yet you can still keep this audiobook for free. I also have a Patreon over here where I provide Patreon members spreadsheets I've used in the past, including the one I used to generate this chart that I used earlier for tax brackets. And as always, don't forget to subscribe to my channel over here and click that bell icon next to that subscribe button so that you get a new notification whenever I upload a brand new video. Thanks for watching.